what the promise of the new administration's policies are probably more production, maybe lower regulation and freeing up supplies. So why should prices be higher?
Yeah, well, I think your answer is, Mike, what you talk about every day, which is actually AI. So AI really is redefining the energy sector. It's the first time in my career that I can remember when the energy sector is really intersecting with the technology sector. So this is creating a whole new growth opportunity for the sector, and we're going to need a lot more terawatt hours of power. But what that also means, from our Tortoise perspective, is we think we're going to need billions of cubic feet of natural gas as the fuel to generate a lot of those terawatt hours. And so we see a significant opportunity, especially in natural gas, but in the overall energy sector, as AI emerges and really develops over not just over a few years, but really over several decades.
I mean, as you suggest, that's mostly a natural gas story, right? I mean, in terms of directly powering and creating more electricity. How much do you think has already been more or less figured out by the market here? I mean, I was just taking a look at, the LNG plays, which I know you've been involved with, Cheniere. I mean, that stock has rocketed higher on these expectations that it's going to be even more of a global market.
Yeah, well, we don't think that really investors have rewarded the energy sector and a lot of the energy infrastructure companies at all, or much, for the opportunity and the growth opportunities related to AI. So now remember, there's no AI without EI, so there's no AI without energy infrastructure. So companies like Cheniere, in Cheniere's case, they're exporting energy to other companies or to other countries around the world that may use that natural gas, right? If you look at Cheniere, well, it's got high-quality cash flows, long-duration high-quality cash flows, a management team that's done an excellent job of allocating capital. And so when we look at Cheniere and its stock price, yeah, it's done really well, but it still has a long way to run with the high-quality cash flows, the growth that we expect, and even potentially higher growth that could be coming down the road as natural gas is consumed more and more really around the world.
You do mention that energy infrastructure is your area of focus. So what other ways would you recommend people position at this point? What are the beneficiaries in the energy food chain?
Yeah, so if you look at a company like Williams, it's an energy infrastructure company. It's a pipeline company, operates hundreds of thousands of miles of pipelines. It's one of the most strategically located pipelines. It's really hard to, you never see these pipelines, but they're really, really essential. And so if you look at where the Williams footprint is, it's impossible to replicate that footprint. But as AI data centers develop, whether it's in Northern Virginia or the Southeast or even Texas, you're going to need natural gas to generate the power ultimately. And so Williams naturally will have a kind of a first mover advantage, a big economic moat to be able to provide that. So that's one example. It's got a good dividend yield, a little over 3%. It's going to grow another 6%. Another example is maybe like an energy transfer. Energy transfer is trading below 10 times enterprise value to EBITDA. You can't find a lot of these discounted stocks like that left in the market, as you know, because the market's been up so much everywhere, but not in energy, not in energy infrastructure. So it's a 6.5% dividend yield. It's going to grow its dividend 3 to 5%. It's going to benefit, obviously, from the AI and the distribution of natural gas, but also exporting other commodities like propane, ethane, even crude oil to a certain extent. So these energy infrastructure companies, investors are starting to really understand. But what I think investors really need to understand is how essential they are, how important they are. And if you understand that, and you look back at their valuations, these stocks still look really compelling and really undervalued.